Yo, what's up you guys? Welcome back to another video. And in today's video, I want to give you guys a overall breakdown in terms of what we can expect in the new week. So we're going to take a look at the dollar index, the Nasdaq 100, as well as gold, the Dow Jones, Euro USD and GBP USD from a technical and a fundamental perspective. If you're new to the channel, a sub would be appreciated as I provide valuable educational content on a daily basis. And if you enjoy the video, please consider hitting the thumbs up button or the like button to help YouTube recommend the video to more people so that we can get more people educated out there as well. Before I get started, I just want to answer some of the questions that I have published on my community tab, just to go through it very quickly. So I'm going to start over here and then we'll jump straight into the breakdown. The first question was from Andile, asking me, why don't you like doing US 30 breakdowns? Well, I do US 30 breakdowns on all of the videos that I've done, and so if you go through this last video that I've made, even that video, I've always done breakdowns on the Dow Jones because I'm focused on the, the 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 dollar index, the DXY pairs mostly. Next question from Adil, saying, will you be doing a live trading session? Unfortunately, I don't have the time to do live trading sessions there also. Jay Rodriguez, good day, Mr. Rolio. Can you please break down the services you offer on Wealth Creative? So basically, the only services that I offer is Signals, which is a standalone, the one-on-one, which is a in-depth coverage of how to read and trade fundamental technical order flow, as well as basically all the elements that I normally cover. And then the masterclass is basically where I do a class with 10 people, also purely based off fundamental technical order flow and sentiment data. Then passing funding accounts is basically where you purchase an account, you send the logins, we pass the account for you, because it's one of the most difficult things to do for people out there as well. Next question, can you perhaps do an analysis of any two instruments from a technical order flow and a fundamental perspective? I would probably be able to. The only challenge that I'll have there is order flow. Reading the order flow data is just going to add more time to the video. So I try to keep the videos as short as possible. In the beginning, I did do order flow, fundamental, technical, and sentiment data, but the videos would end up being 30 minutes. So I'm trying to reduce the size of the length of the video. That's why I only focus on fundamental and technical data. Order flow data is in any case delayed because the data that we will be looking at was last week's data, and because the data gets released on a Tuesday and you get it the Friday, it holds no it doesn't guarantee that any of that information is going to pass into next week. Some people just use it to look smart. Garabo is asking, how long did it take you to become profitable? So I've been trading for 10 years, and I'd probably say for the past 3 to 4 years I've been profitable, and now which basically allowed me to quit my job last year and focus on trading full time. Vushumzi is asking, is it a good idea to stick with one instrument? I think if you start out as a new trader, then the best thing to do is to focus on like major pair, like Euro USD. That's normally the first pair that people look at when they come into the market. So I would say it's a good idea, but for me, I focus on an index, which is DXY, and that allows me to expand my portfolio with everything that is subjective to the dollar index. Next question is, do you trade UK 100? I don't trade UK 100 because just like the NAS100, the NAS100 is a composite that's made up of 100 top tech companies in the USA. UK 100 is the 100 companies on the London exchange again. So in order for me to go and understand that, I will need to dive into the fundamental aspects around what's happening with the euro market, and I'm not so focused on that. I'm more focused on the dollar index, and this is why I focus on the Nasdaq, because these are all US stocks there as well. And that was it for the questions. So that is it. So let's just jump straight into the data, my good friends. So the first thing that we are going to take a look at is we're going to look at the data that we got last week. This week we've got a crazy week. It's basically a fundamental landmine, and I would suggest you to just completely avoid the market, because why? If you are caught on the wrong side of the market this week, then you could potentially have a very bad run. The first thing that we can see is we've had the core PPI that came through, as well as the PPI. Now we're going to jump straight into this article over here, which is the wholesale inflation. It's come from AP News. That says the wholesale inflation in the US further slowed in November to 7.4%. It says your wholesale prices in the United States rose to 7.4% in November from a year earlier, a fifth straight slowdown, and a hopeful sign that inflation pressures across the economy are continuing to cool. Now, I'm not sure where they got that information, but it's probably because it's me and it wasn't written there. But a high PPI is just an indication that inflation is still on the rise over there as well. So it says here the latest year-over-year figure was down from 8% in October and from a recent peak of 11.7% in March. Now, the most important thing that you need to understand here is that the overall inflation is moving in the right direction, though at a slow pace. PNC Financial Services Group said in a research note. I don't have to do, like, a person doesn't need to do research to make a statement like that. But the Fed's monetary policy tightening plans will remain aggressive until clear, consistent signs of inflation must have been demonstrated. Now, basically, to summarize the article for you, basically along these lines over here, because this is all what we care about. The Feds will remain with the aggressive approach to inflation until there's signs of until there's signs that the market's going to slow down. Now, if we go and have a look at next week Monday or next week Tuesday, we're starting the week off with the consumer spending index, which is the main indicator that we will use to determine whether inflation is on the rise or whether it's not on the rise as well. But the PPI data for Friday has given us a slight indication that we could potentially still see the CPI data come through higher than expected. Now, this news is not rocket science, and I'll tell you how this will fit into the other. We're going to start off Tuesday with the CPI data. Now, if the CPI data comes out higher, then you can expect the Feds the following day to hike the interest rates, and this will increase the dollar, decrease gold and the stock market also. With that, you'll have core retail sales and you've got the flash services PMI, but you don't have to worry about the core retail sales, because why? The most important news, although all of them are marketed, is going to be the federal funds rate and the CPI. As you can see, we've got news Tuesday, Wednesday, Thursday and Friday. You are going to have to be very careful in terms of what's going to happen, and I'll give you guys a breakdown on either direction in terms of which way this market will potentially go, so that you can understand how this works as well. Two probability setups. The first one is, we know that we had positive PPI. Now I'm just going to do it straight from the daily time frame so that you don't have to run around. Now we're going to look at two probabilities, right? And if we look at the price action, we can obviously see that the dollar index has not basically completed any moves either to the upside or to the downside. Now the dollar index basically had just, as you can see, had been moving sideways for last week, even with some positive PPI data. You can see the market printed support, broke below support, tested it as resistance, and if you count here, you can see 1 2 3 4 5. That was basically the dollar index there last week, not doing a single thing, because obviously the most important news that the market's waiting for is going to be the CPI, which is going to lead to the interest rate decisions. Now, let's say inflation comes out higher, then you can expect interest rates to also come out higher, potentially a 0.75. If that is the case, then we can expect the market to continue higher, pull back, and then continue this rally to the upside. In doing so, will the market then print what's known as a W formation to the neckline and then continue this rally to the upside? If inflation comes through lower, then we can expect the Fed to have a softer landing in terms of their interest rate decision, thus weakening the dollar index, discouraging investors to basically invest in the DXY because of lower returns due to interest rate hikes by the Federal Reserve. And this, we could then see the dollar index weaken further into the rest of December. Now, due to the correlation between the Nasdaq, the stock market, and the dollar index, the expectations are basically all the same here. Now, this is a level of support, and because we have a green candle that is printed next to a red candle, we're going to use this as a structural level there as well, because price action is created through market structure, and market structure that gets created when the market prints a red candle next to a green candle. This level over here would then act as a level of resistance. Now, if the CPI does come out lower, we can expect the stock market to rally higher. This would then mean the Feds are less likely to hike interest rates at a higher point. This would then make things a lot easier for consumers to be spending money at the end of the day. Also meaning that when they don't hike the interest rates, it just means more leverage for consumers to basically get into spending more money. Next up, we've got gold. Gold has basically just completed a W formation. As we can see over here, this was an overextended W formation. An overextended W formation is normally completed at the left leg. This one got completed at the neckline, printing this impulse correction and impulse pattern. However, the market is now faced between support and resistance, and the fact that we got a very busy week for the dollar index, and because the dollar index is negatively correlated with gold, meaning that when the dollar increases in value, you can expect precious metals like gold and silver to decrease in value because gold is priced in dollars, so it's obvious that it gets impacted by the dollar index. So when we go and we look at structure that was formed here, is we can see that these were the two structures that the market had printed. This level over here acted as a strong level of resistance. The market broke above that, came to test it as support, instead came to hit this level, but then went higher. The market is now again stuck between resistance that got broken, tested it as support, support did not hold, back to resistance, broke above that, tested it as resistance, and that level is now support. Now, like I said before, this is the two-way probability setup over here. Again, if inflation does come through lower, we can expect a softer landing for the dollar index on Wednesday in terms of interest rate hikes, this increasing the value of gold, and we can definitely expect gold to continue higher. Alternatively, if the inflation does come through higher, we can expect the Feds to continue their aggressive approach in terms of the interest rate hikes, and we could potentially see another 0.75 coming through as well. Next up, we've got the Dow Jones, and this was an analysis that I did before. I'm just going to remove this very quickly. Now, the Dow Jones also, as we can see over here, the Dow Jones is currently faced with this level over here, and the Dow Jones is faced with this level here. Now, this level over here acted as a level of support. The market broke below that, came back, tested it as resistance. The market has also found support there. So again, what you will notice is during the week or before the week of high impact news, the market tends to move sideways, and you can see here for 3 days in a row the Dow Jones was just basically trading sideways. Now again, if CPI data comes through lower, then this move to the upside is definitely expected for the Dow Jones. Is this, we expect the Feds to not hike interest rates as aggressive. If the inflation does come through lower, this we can expect the Feds to hike interest rates as aggressively, and we can expect the stock market, especially the Dow Jones Industrial, to continue lower. Next up, we've got Euro USD, and Euro USD, as you can see over here, is also last week hasn't done too much. Basically printed resistance, and then broke above resistance, tested it as support, and it failed to continue higher. And this is because normally, when high impact news is on the rise that we know is going to impact the dollar quite aggressively, the market tends to move sideways. Now, same principles apply over here. If the CPI does come through lower, then we can expect this to happen. If it comes through higher, then the euro will be forced to give up this nice bull run that it had printed for this entire time over here. So the best thing that we are going to have to do this week is we're probably going to have to sit on our hands and wait for the data to be released first, and then in order to make better trading decisions there as well. Next up, we do have GBP USD, and you can see over here without even trying to do anything, you can see the market is currently faced with very strong resistance, and also resistance that got broken as support. And you can see this market also just moving in between, because investors don't know if they should buy or if they should sell. Again, a lower CPI definitely means a weaker dollar. A higher CPI definitely means a stronger DXY. And I have made a lot of videos on fundamental data, so you guys are more than happy to go and watch that videos. If you don't understand what CPI is, if you don't know what PPI and the abbreviations means, basically there as well. Guys, that is my outlook for this week. And like I said before, be very careful in the markets this week. The whole week is filled with some very, very, very expensive data for the dollar index. Now, my good friends, that's all from my side. Have a beautiful weekend further. Thank you for your time. And as always, cheers for years.